closed sales in the Denver metro jumped 36% month over month in the month of February. Hey, it's Sean Ready, Keller Williams Ready Group. Each and every month we bring you the Denver metro market in a minute. We'll probably go a little long, where we look at month over month and year over year, plus some longer term perspective on the Denver metro real estate market, so that if you plan on entering the market, maybe you're already in the market as a buyer or seller, you're doing both, you can put this data to work for you and gain leverage in your position. So, as I mentioned, as I led off with, closed sales. 35.6% increase from January to February. That is massive. And before I get into the rest, I just want to explain the color coding. So if the metric, and we look at 9 key metrics of the real estate market, if it is highlighted in green, it did move in favor of sellers. If it's highlighted in red, it moved in favor of buyers. And you can see there's a whole lot of green, biggest of which already touched on, 36% increase in closed sales. Next up, look at market times. Average market time dropped by 24% month over month, while the median market time dropped by a whopping 57%. It means homes are selling faster. That's the second straight month that both of those metrics have declined. So we're seeing more velocity in the Denver metro real estate market for the homes that are going under contract. And speaking of contracts, new contracts jumped for the second straight month. Last month went up 46%. Obviously, that's comparing January to December. New purchase contracts aren't exactly on everyone's mind in the month of December, so that's a natural jump. But that momentum continued with a 14% jump in the month of February. Now, on to prices. For the second straight month, the average selling price, what closed in that month, did increase 1.4%, 1.2% the previous month. The median price also went up 1.7%. And lastly, for the third straight month, the leverage factor, the seller leverage factor, which is median sold price to list price ratio, went up a very small 0.2%. But that just means that deals are closing for closer and closer to asking price. In fact, last month, 99.32%. Now, for the metrics that tilted in favor of buyers, for the second straight month, there were more new listings. Last month, listings spiked 152%, as I reported in this channel. This past month in February, another 13%. Now that brings the total inventory on the market up for the second straight month to 9,858 homes on the market in a 7-county region in the Denver metro. Good for an 11.4% spike in inventory. Now, how does this compare to last year? Month over month tells us one story, year over year, usually a different story. So year over year, a lot more red than green, where we saw a lot of green in the month over month metrics, indicating maybe some stronger tailwinds picking up. The market is much more buyer favoring right now than it was in February of 2025. And here's where specifically. Available homes are up 6% year over year. That means more inventory to choose from if you're a buyer. That means more competition to be aware of if you are a seller. New listings are up 4.4% year over year. Closed sales are down almost 1% year over year. And check this out, prices, average and median selling price. Now this only compares what closed in February, what closed in February of last year. But both are down when we historically will see at least 3-4% increase. So really that's like a loss 4 to 5% when you think about it that way. So average price down 2.2, median price down 1.7%. And that leverage factor that kicked up last month, it is down slightly 0.2% year over year. As far as market times, the average, coincidentally, exactly the same at 51 days to go from listing your home to under contract. The median down 5%, albeit that is only 1 day. So pretty equal there. But on the headwind side, tailwind side, purchase contracts did pick up slightly by 3.3% year over year. So yes, a lot of headwinds when you look at the year over year. Yes, a lot of tailwinds when you look over the month or when you look at the month over month. But let's take a look at a little bit longer term perspective here. No, you don't have to read that. When we're going to look at graphs dating back to August of 2022. So what is that? About 3.5 years worth of data built into these handy dandy little graphs that tell us where we have been, which help indicate where we might go next. So why did I start in August 2022 specifically? Well, that's right around the time the winds started shifting and the higher mortgage rates started having a real effect on the real estate market in Denver Metro and a lot of metro areas. We're going to start with average and median days on market. Average in the blue, median in the red. And you can see every year it works in waves, with the peaks being in the winter months and the troughs being in the spring months before a slow climb back up to through the summer and fall and back into winter. Well, check it out. We saw a very steep decline month over month, specifically in the median days on market, bringing it back down to where it was pretty close to where it was in the bottom of last year. Not quite to where it was in 24 and 23, but 20 median days on market really sunk that trend line. And we're seeing average days on market obviously follow that same trend line as well. So expect that to continue to go down at least over the next couple of months. We'll see faster and faster sales velocity. So if you're a buyer, don't sit too long when you see the property that you want. And if you're a seller, make sure you are talking to your agent about strategy to ensure that you maximize on the demand that's out there. Okay, next graph here. Kind of three-pronged, a little more complex, but they all fit together nicely in terms of big picture on the market. So available homes is in the red. That's just the inventory that's on the market and in any given month. Let me scroll down to the months. New listings is in the blue and new purchase contracts in the yellow. So relationally here, first of all, on the available homes, you see the peaks and the troughs and steadily going up the last 3.5 years in terms of total inventory. Now, we're going to continue to see that inventory level climb, usually towards the end of summer, and then it starts its rapid descent going into the fall and winter months. Not going to be any different here, except the baseline this year, or I should say the bottom this year, was higher than the bottom last year. So I suspect we'll probably see the peak go higher than it did last year as well. New listings are fueling that inventory number, of course, and you can see it's beginning its typical early spring rise, albeit, kind of, I don't want to say it leveled off, but it wasn't as steep as it was the previous month. And then same thing on new purchase contracts, that will continue to rise usually through, we'll call it March or April, one of those 2 months, and then it starts to dwindle off for the rest of the year. So what that means, you're going to see, well, we talked about it. You'll see more and more competition if you're selling a home. You'll see more and more options if you're buying a home. But the entire market lifts up. The floor on each of these metrics continue to lift up as we go into the spring months here. From here, closed sales, peaks and troughs. We're going to see that probably peak out sometime around April, as we normally do, maybe into May. And we'll see if that peak does indeed beat the peaks of the last couple of years. So far, so good on that front, because you look at February of last year, we're right there. February the year before, not quite. So probably going to end up pretty equal to last year's peak in terms of maxing out around 4,000 to 4,500 homes that close in any given month in the spring months. Now, last one that everyone waits for, what are the prices doing? Well, overall, pretty flat over this 3.5 year cycle. Now, obviously, there's some peaks and valleys. Obviously, this isn't necessarily indicative of values across the board, because it is measuring what closes in any given 1 month and just plots that out on a graph. But there's no overarching upward, nor is there an overarching downward trajectory. It's just what's selling in that month. Now, if we were to take this back into the COVID market, it would have been a rapid acceleration month over month over month, but we're not there anymore. So last thing we'll look at, this is the median sold price to list price ratio, that leverage factor if you're a seller that I was talking about. this does tend to fall nicely in line with the 98 to 100%. And that does measure it to final asking price, not initial asking price. So no, you can't, slap $1 million price tag on your $700,000 home and expect it to close for 99%. There has to be a number that causes it to sell, and that's what it's measured against. So we are seeing, what did I say? 3 straight months of that climbing, which could be one or both of two things. One, overall strength in the real estate market, favoring sellers a little bit more and a little bit more. Two, what's more likely is that agents and sellers abound are coming to grips with market realities and strategy to ensure they get the pricing right from the get-go, which does cause more demand when it is done strategically and well. So there you have it. As far as taking this data and putting it to work for you, first, make sure you are aligned with a real estate professional that does understand this data and studies it. That way he or she can help guide you into the best transaction for you, because this is a broad look at 7 counties and it's going to vary differently depending on where you go. And if you don't have that person, we would love to be that person. Make sure to reach out, drop a comment, find us on social. Again, Sean Ready, Keller Williams Ready Group. And we'd love to break this down to your specific situation, where you're looking, where you're selling, and how this data works in favor or potentially against you, depending on your goals. So thanks so much for watching. We'll see you next month.